Good day, everyone. You're welcome to today's live stream. I believe you can hear me. If you can hear me loud and clear, please drop a comment. If you can hear me loud and clear, you're welcome to today's live stream. How has been trading this week? I hope it's been good. I hope it's been good. How has been trading this week? Please drop a comment if you can hear me. I want to be sure you all can hear me before I start the class. I want to be sure you guys can hear me loud and clear. If you have any question or any pair you want me to analyze, let me know in the comment section. I would like to know the pair you're considering trading today and also the buyers, your buyers for that pair. I would like to know. Kindly drop it in the comment section. What pair are you considering trading today? What pair are you considering trading today? I've not seen any good setup on my preferred pairs. I've not seen any good setup on my preferred pairs. GBP USD, Euro USD. If there's any pair you're considering trading today, I would like to know in the comment section. Can you hear me? Can you hear me? Okay, I want to assume you all can hear me. So let's go straight to business. So we'll start by analyzing the fundamentals for today. Today is 11th December 2025. And today we're expecting some major news. Yeah. Australia has released its employment change. That was released 1:30 a.m. Nigerian time, and the actual was less than the forecast. It was less than the forecast, and the unemployment rate for Australian dollar was positive. The forecast was 4.4, and the actual was 4.3. That is a 0.1% difference. And by 9:30 a.m. Nigerian time, Switzerland Bank released its policy rate. Everything remains the same. The previous forecast and actual is the same. Okay, and by 2:30 p.m. Nigerian time, the United States will be releasing its unemployment claims. The previous is 191K, forecast is 220K. So they are expecting an increase. So if the actual value is less than this, that will be positive for the dollar. If the value is less than this, that will be positive for the dollar. Okay, so that's it for fundamentals. Let's go to the chart. So we'll start by analyzing dollar index. Yesterday I told you guys dollar, my bias for dollar is bullish. Unfortunately, the market did otherwise. The market did otherwise. The trades I had, that was Euro USD and GBP USD, both trade. It's my SL. I took SL on both trade yesterday. Okay, I took SL after FOMC news. I think the news was negative for dollar. That was why dollar sold. The news was negative for dollar. That's why dollar sold yesterday. Another reason dollar sold yesterday could be that they wanted to sweep the liquidity residing at this previous low. Okay, because they know most retail traders like me would have executed a trade, would have gone long dollar. So they had to come and switch this liquidity that was residing at this previous, and also liquidity residing at this previous low. I think that is the reason for, that could also be the reason for the that could also be the reason for the sell. Okay, so now that they have swept liquidity, there is a high probability they might want to push price up. Okay, so my bias for the dollar this week still remains bullish. It still remains bullish. My bias for the dollar this week remains bullish. Okay, so today I'm looking to, like I said, I don't, there's the trend or the pattern on Euro USD and GBP USD isn't clear yet. So I think I would have to wait for today's candle to close before making a decision on dollar index. Okay, I'd love to see candle close before making a decision on the dollar. If I'm going to take any risk on dollar today, it would be buy. It would be buy. Okay. But the best time to execute a trade on dollar would be after the close of today's candle, which will be tomorrow. Or after the major news has been released. If I see a bullish reversal pattern form on dollar index, I would consider buying the dollar. That's my take on the dollar. Hey Buka, good morning. It's been a while. How are you? Okay, so let's look at yen basket. Yen basket. Okay, like I told you guys yesterday, look at the weekly time frame. The yen basket has tapped into this fair value gap. Let's see, that's tapped into this fair value gap. And you can see that the market is reacting to that gap. It's reacting to that gap. And like I told you guys yesterday, this is not the right time to sell yen. It's not the right time to sell yen. You should look for opportunity to buy yen. So the close of today's candle would determine my buyers for yen. I think yen is set for buy. Okay, we have this inverted hammer. Yesterday candle closed as an inverted hammer, and I believe the market is trading above the average of this candle, of yesterday candle. So if we go down to 4 hour, let's see what we have on 4 hour. On 4 hour, we have this mitigation. This mitigation, I think the market is forming. You can see this mitigation. And on 1 hour, let's see what do we have on 1 hour. So you can see that that trend line has been forming series of low, high, higher, low, higher, high, higher, low, higher, high. Okay, so I will be considering going bullish on yen if it pulls back to fill this fair value gap. Okay, I would go bullish on yen if it pulls back to fill this fair value gap. That would be a very good area to consider buying yen. That's my take on yen. Yen should come fill this fair value gap. It should fill the gap, not drop into that gap. It should fill the gap completely. If Fibonacci from this swing low to this swing high, I should pull back to discount area. Discount area, we have this fair value gap that needs to be filled. So this is where we should consider looking for buys on the yen basket. I hope that is clear. I hope that is clear. If you have any question or any pair you want me to analyze, let me know in the comment section. Give the video a thumbs up if you haven't done that, so that others can get to see this video, so that others can get to join this live stream. Also, if it's your first time joining the live stream, do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Starting next year, maybe from the 15th of January, I would be teaching several strategies that you can use to earn consistently from the market. So you need to be subscribed to the channel so that once the class starts, you'll be notified by YouTube. Next year, I will be teaching several strategies that you can use in trading. Okay, so let's go to MT4. So let's start with GBP USD. So I'll start with the daily time frame. So yesterday candle closed bullish, swept the liquidity residing at this previous high. Okay, swept the liquidity residing at this previous high. This buy could be the reason for the buy we saw yesterday could be this previous high. It swept this liquidity, and also if you go left, look at your left, you would see there was a fair value gap here. I think this fair value gap needed to be filled. Okay, this fair value gap here needed to be filled. That gap has not been filled, so it's still very possible that they will sweep this high. This recent high might be used as liquidity. It might be used as liquidity. So on GU, I want to wait for today's candle to close. If today's candle closes bearish, I will look for opportunity to sell GBP USD tomorrow. So it seems like today I wouldn't be trading today. From what I'm seeing in the market, I can't find my pattern. Okay, so here we had on a 4-hour time frame, we had a spinning top indicating change in trend from bullish to bearish. And I think after the formation of this spinning candle and this bearish candle, a fair value gap was created on 1 hour. Let's see. Okay, you can see, I think we had this fair value gap. We had this fair value gap, and this fair value gap has been filled. This fair value gap has been filled. It has been filled. Looks G is set for sell. Let's see 15 minutes, and we have the shifting market structure has occurred here. You can see this shifting market structure has occurred here. There was sweep of liquidity of this previous high. The shifting market structure occurred at this point. Price pulled back to fill the fair value gap that was created. Okay, so this is a sell setup on G. This is a sell setup on G. Okay, so let's see. So my take on GE today, if I'm going to take any risk on GE today, it will be a sell. It will be a sell. But I'd love to wait for 4 hours to close. That would be a very strong confirmation. Confirmation on sell. Okay, that's my take on GE. I'm looking for sell opportunity on GE. And on EU, let's start with the daily. Okay, so on yesterday, the close strongly bullish, so the liquidity resided at this previous high. Probably after the formation of this candle, a fair value gap was created. That could also be the reason for the buy. Okay, let's see. Let's go down to 4 hour. Let's see if there's any fair value gap at that area. Okay, so can you see that? Can you see that? Is it? This fair value gap could be the reason for that buy. They had to come and fill this fair value gap. So I think I'm going to risk selling GB Euro USD. I think I'm going to risk selling Euro USD. If I'm selling Euro USD, my stop loss will be at this level. Stop loss will be at this level. Euro USD looks nice. Setup here looks nice. Okay. So you can see the fair value gap. You can see the fair value gap. Price came back to fill this fair value gap, and you can see price closed above this fair value gap, and that could be because there's a fair value gap on a lower time frame. That's the reason price broke out from this fair value gap. Let's confirm on 15 minutes. No, sorry, let's go to 1 hour before we go down to 15 minutes. Most likely a fair value gap. We had a fair value gap above this one. We had this. This is not a fair value gap. So let me say 15 minutes. There's a reason price broke out from this fair value gap on 4 hour. Let's go to 15 minutes. There is no fair value gap here on 15 minutes. The only fair value gap we have here on 15 minutes is this. I don't think this gap has been filled. Let's see. I don't think this gap has been filled. If you have any question or any pair you want me to analyze, let me know. This gap has not been filled. Gap has not been filled. So this is a nice setup on GU. This is a nice setup on GU. Let me see. This is a nice setup on GU. But the close of today's can be a strong confirmation for sell. So what am I going to do in this case? What am I going to do in this case? I'm going to reduce my risk. I'm going to take this trade. I'm going to take this trade. I will reduce my risk on the trade. I will risk 50% of my daily drawdown on this trade. 50% of my daily drawdown. That is what I'm going to risk on this trade. Then if today's candle closes bearish, I'm going to risk the remaining 50% tomorrow. That is my plan for GBP Euro USD. Any question? If there's anything you want me to analyze, let me know in the comment section. Gold, let's look at gold. Gold. What's happening on gold? What do you guys think? What's happening on gold? I think the best risk to take on gold now will be sell. From what I'm seeing on this chart, it will be sell. To be sell. Okay, to be sell. If we work with this previous range, if we apply a Fibonacci from this previous range, price is currently at a premium area. Price is currently at a premium area. And at the premium area, you can see the pattern that formed there. It's a shooting star. Okay, it's shooting star. Price should pull back to a discount area. So I think the best risk on gold now will be sell. It will be sell. Okay, it will be sell. It's also possible for gold to sweep liquidity residing at this previous high. You can see for some days now, gold has been in a range on a daily time frame. Gold has been in a range, but if we work with this previous range, this swing high to this swing low, price is at a premium area. That is why I think the best order to take will be a sell. Because if you work with this previous range, this swing high, swing low, price is at a premium area. So I'd love to see gold. There's a fair value gap. I would love to see gold fill. This fair value gap here, this tiny fair value gap here, this tiny fair value gap here. There's a tiny fair value gap here. Let's go to 4 hour. Maybe it will be more clearer on the 4 hour time frame. This fair value gap here. Okay. You can see this fair value gap on gold. I'd love to see gold because there was an attempt to fill this gap at this point. It wasn't filled completely. So I believe this low will be used as liquidity. This low will be used as liquidity. That's my expectation on gold. That's my expectation on gold. That's my expectation on gold. Let me see. Okay, so I'll first love to see gold pull back to fill this fair value gap before going bearish. This is where I would risk selling gold. Gold should come fill this gap it's created here after the shift in market structure. Okay, you can see we had market swept liquidity residing at this previous high. You can see that market swept liquidity residing at this previous high, and there was a break of structure, shift in market structure, change of character at this point. And after shifting in market structure, price is expected to pull back to a premium area before going bullish. So you apply your Fibonacci from this swing high to this swing low. Best area to look for sales will be at premium area. And at this premium area, you can see we have this fair value gap, this fair value gap. So on 15 minutes, price should come back to fill this fair value gap. That's my take on gold. This will be a very good area to consider selling gold. We have 7 more minutes to go. If you have any question, let me know. Ms. Chibuzo, I just analyzed gold. I hope you got that. I just analyzed gold. I just analyzed gold. If you want to sell gold, wait for gold to pull back to this zone before you sell. If you want to buy gold, wait for price to come fill this fair value gap. If you want to buy gold, wait for price to come fill this fair value gap. If you want to sell, wait for price to come fill this buy side inefficiency. Okay, so that's my take on gold. If you have any question, let me know in the comment section. So let's look at GJ. That will be the last instrument. If you don't have any question, GJ will be the last instrument. So let's start with the daily time frame on GJ. GJ has been bullish for months now. GJ has been bullish for months. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this all through this year, GJ has been bullish. All through the year, GJ has been bullish. So if you had bought GJ, let's assume you caught the move here from this point this year. If you have caught GJ from this point this year, you would have made 1,810 pips. 1,810 pips. So let's say you traded with 0.01 lot size. Let's assume you made a deposit of $100 and you are trading with 0.01 lot size. You would have made 180% return on your investment. 180% return on your investment just by placing one trade for that year. Well, not many people have the patience to hold trade this long. Not many people have the patience to hold trade this long. Okay. So we just had little sales on GJ this year. Little sales on GJ. The bulls were in control. They were in control all through this year. All through this year. So they swept this liquidity. So I don't think it's the best time to look for buys on GJ. Instead, look for sales. They've swept liquidity, and after they sweep liquidity, which is an external range liquidity, price is expected to pull back to an internal range liquidity. Price is expected to pull back to an internal range liquidity. So on the weekly time frame, we have this fair value gap, which is an internal range liquidity on the weekly time frame. So price is expected to pull back. Okay, this is a fair value gap on the weekly time frame. Let's see daily. Okay, on a daily, we have this fair value gap also. We have a tiny fair value gap here. We also have this fair value gap. So if you want to buy, should wait for price. If you apply your Fibonacci from this swing low to this swing high, you want to wait for price to pull back to a discount area. Okay, so you should be considering buying at a discount area. This fair value gap is above the discount, so it's not a good fair value gap to consider. Okay, it's not a good fair value gap. So let's go to 4 hour. I'm sure there's a fair value gap here on 4 hour time frame. Best fair value gap to take trade on is fair value gaps are created at discount or premium area. Those are the best fair value gap. Most valid fair value gap are identified at discount or premium. So this would be a very good area to consider. Consider buying GJ. So with what I'm seeing on this chart, you can see that after this strong buy, this impulse move, you can see that price went into a range, which indicates that the buyers are getting exhausted. It indicates that the buyers are getting exhausted. Okay, so yesterday candle, as you can see, it closed as an hanging man. This is a bullish hanging man, and the rule is that when a bullish hanging man forms, you wait for the next candle to close bearish. So it is after the close of today's candle. If today's candle closes bearish, that will be the right time to sell GJ. That will be the right time to sell GJ. With what I'm seeing on 4 hour, with all these highs that has been created, all these highs, there's a high probability these highs might be used as liquidity. These highs might be used as liquidity. Okay, so it's best to wait for today's candle to close before taking a trade on GJ. That's my take on GJ. You can see this previous candle close as an hammer. After sweeping the liquidity, the sell side liquidity close as an hammer, which indicates that we still have more buyers in the market. You can see. So this could push price up. So I'd love to see GJ sweep this liquidity before going bearish. If it doesn't sweep this liquidity, if today's candle closes bearish, and after the close of, if I get my average price after the close of today's candle and the candle for tomorrow opens below the average price, I would sell GJ, and this is where I will set my TP. My TP will be at this area. I hope that is clear. Any question? Any question? Our time is up. Do you have any question? If you're yet to give the video a thumbs up, please give it a thumbs up. If it's your first time joining the live stream, just subscribe to the channel so that anytime I come on live, you get notified by YouTube. And if you are yet to take up the offer from Oro Market, the reimbursement account, if you are yet to open that account, take advantage of that offer while it is available. Take advantage of the offer while it's available. You fund your trading account with a minimum of $100. If you make any loss, if you incur any loss, you will be refunded. If you blow the $100, you get a refund that you can trade with. You get a refund that you can trade with. You cannot withdraw the $100 that will be credited into your account, or you can trade with it, and whatever profits you make on that $100, you have access to it. You can make withdrawals on those profits that you make. This is a great offer. Instead of funding other brokers your $100 and you lose it without getting a refund, it would be wise for you to take advantage of this offer. You blow it, you get a refund. So you trade with peace of mind. You trade with peace of mind without panicking. I want every one of you to take advantage of that offer. Take advantage of it before it closes. Any question? Any question? Do you have any question? Do you have any question? Do you have any question? All right, so these are no questions. No questions. So I appreciate you for your participation. And see Mrs. Chibuzo and Ebuka. Thanks for your participation. I wish you all a profitable trading day. Bye for now.